Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday morning market webcast. Okay, so let's start off on the daily chart. And what we've got here is basically what we talked about yesterday. You had the push up off the 200-day moving average on Wednesday, the push up off the mid-band on Wednesday. Since then, we have been fighting over 2,800, the 50-day exponential, which comes in also at 2,800, just a tad under, call it 99.5. And the 100-day exponential, which is up at 04. Throw into the mix the pre-FOMC price at 28.08.5. And what you had yesterday was a decent day to trade. We did about 15, 16 handles. We had a couple of big ones, but we didn't really go anywhere. You can see the range just by the naked eye. You can see that's got to be the narrowest range in the last 7 days. I mean, we've been putting together some pretty good ranges. So what we've seen here in last night into tonight is they took it back up to 11 quarter. They couldn't convert 10, 11. You got the pre-FOMC price there again at 28.08 half, and they've taken it back down as far as 89 half, but that's kind of, it's all kind of rebounded back towards the roundy, and they're taking it back up now. We're trading about 95. So we're in this battleground. The bears really want to perform here. If they perform, then you say, look, okay, multi-day rallies happen. We're back down here. The bears really might control this tape for the rest of the year. What the bulls want to say is, okay, they had their fun. We had this massive compression. You got your expansion down. 26.03 was the end of the line. They've given up every significant moving average on the chart since then. And now we're back into buy dips mode. We believe that the daily midband here is converted. And our plan is to go up and deal with the upper band in and around 28.50. So, the battle lines are drawn. Hourly chart. Weekly pivot didn't even get a sniff this week. And it's been basically a straight up week. This is one of those weeks that people fight. And they get themselves into serious trouble. They say, well, we've gone up enough. We've gone up enough. We've gone up enough. And, they're fighting it. They're adding. They're taking huge hits. And it's completely unnecessary. So, what we've done this week is we've tried to stay with the upward trend as much as we can. We had some nice shorts along the way as well. Had a really nice short after jobs yesterday when the pre-FOMC price failed in and around 08 half. So 15 and a half yesterday, 30 the day before that. 26 on Monday, and I don't know, I didn't add up Tuesday yet, but +8, +8, +4. Look, the point I'm trying to make to you guys is, if you just stay on the right side of the freeway, you're not going to get hit by cars so much. Okay? That's just common sense. I know it's hard to fight price when it's going up like this. I know it's easy to take that short. Here's the problem. It doesn't work. It didn't work. It hasn't really worked at times this year. Any significant down move we've had this year has been telegraphed fairly well by a series of lower highs. It's not like it's peaked and dropped and not given anybody a chance to get in. See, people want to be short. They don't think it's going to give them a chance to get in. It has always given you a chance to get in. And you know what? If it can't get over the top of 2,800, it's going to give you another chance to get in. February gave you a chance to get in. Everything is provided a chance to get in. The latest highs at 29.47, they compressed for a week and a half, and then we fell out of bed. Plenty of chances to get in. But the mentality from traders is, if I don't short it now, I'm going to miss it. I'm going to miss it. I'm going to miss it. You're not missing anything. What you're missing is another higher high. What you're missing is another flag back to test something like mid-band support, and then just the damn thing just keeps going up. So like I said, stay on the right side of the freeway, and you won't get hit by cars so much. What we try to do in the room is stay on the right side of the freeway. And if you trade this stuff every day and you're struggling, you should come on in, because in my humble opinion, if you pay attention, follow along, and learn from a lot of the great people we have in here, you won't be struggling anymore. So I'll be out with some stuff later today. I'll be very interested to see how 2,800 plays out. I told you guys yesterday that my biggest thing was, are we going to close above or below 2,800? We closed above, and then they pretty much just gave it up. So it's that whole decision has been tabled into today, and it may be tabled into next week. We could fight over the roundy for a while because the result of this battle is very important, and the result of this battle is going to stretch on into the rest of this month. Either we're going to have, we're going to go back into that 2603 area, 2600s, or we're going to head back up into the high 2800s, and that's what the rest of the month is going to be about. We're deciding all that now. Okay, have a great day. Have a fantastic weekend. I'll be out with some stuff on social, so check that out. Until then, trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.